Hey everyone, this is Dan Charles with StocksAlerter.com, and in this video I'm going to talk about how to buy a stock, the various ways to get in a position. Okay, before we get to this, please subscribe to the channel to get more videos, and also in the description box below, check out our links for StocksAlerter.com. Okay, let's get to it. So in this scenario, we have a market order, a limit order, and a stop loss order. Now, if you want to buy a stock, you can use a market order or a limit order. And a market order will get you in at the current market price. And this is good if you want to enter quickly. And usually, if a stock is very liquid, meaning there's lots of shares traded in a day, a market order is great. And it really is just good if you're confident that the price is going to go up or down, and you just want to get in. A stock like Apple, we're looking at an Apple chart here, very liquid. One of the most liquid, heavily traded stocks on the planet. So that's a market order. A limit order is when you want to enter, but at a specific price only. So, for example, if we're looking at Apple, Apple closed at $319.23. $319.23 was the most recent close. Let's say you put in a limit order for $320 a share. So if Apple comes up the next day, hits $320, you're going to get your position in Apple. But there are scenarios where you're not going to get that order because Apple may not hit that price. You could get a gap up. It's very common where you have a stock, like I pointed out, Apple closed at $319.23 last day. Stocks can gap up. They can open higher. So let's say Apple opens at $322 tomorrow. It's very common. If we look in just recently, we can see on January 8th, you can see price closed at 303.19. The next day it opened up. This is called a gap. It gapped up. So in that situation, your 320 limit order would not be filled. Also, sometimes stocks will gap down. So let's say if Apple opens up at 317 tomorrow, you're not going to get that order. It's not going to hit unless it opens at 317 and has a big rally the same day or the next day, and then you hit that 320 price, then you will get your order. But if you had a market order, you would get hit on the gap up or the gap down. A stop loss order is very, very important because a stop loss order minimizes losses. A lot of people who get into trading or investing, they don't use stop loss orders, and that is a big mistake because you need to be able to limit those losses if the trade goes against you. So for example, let's say if we did get that position at 320 and we put a stop loss at, say, 316. So we've entered the stock at 320, but let's say after we enter at 320, the stock starts dropping. Let's say it drops the next day, and then the next day it comes down and hits that 316 price. We would automatically be stopped out of the trade, meaning we wouldn't be in the trade anymore. We'd be over. And typically, when a stock is dropping, it will potentially drop further. So maybe we come close to our stop loss, and then it turns around. That happens all the time as well. So I just pointed out we have a stop at 316. Let's say price comes down, hits 316.40 or 20, or even gets all the way close within cents of that 316, but then it turns around and then continues the uptrend. That happens pretty often as well, but our stop doesn't get hit So it keeps on going. Now with the market order, they have their place just like the limit order. A market order, if you just blindly put in a market order and the stock gaps down, you're going to enter on that gap down or that gap up. But maybe you don't want to enter if it gaps up or if it gaps down. Me personally, my rules are I don't want a stock to gap up too high or gap down too low. I will not get in if that happens. So these are the three tools I use. Again, the market order is great for highly liquid stocks where you just want to get in and you're confident where price is heading. Limit can be better for less liquid stocks, like a penny stock, for example. A limit could be used to get your position. Stop loss, we always use a stop loss. We always want to limit our losses. Okay, that is the video for today. Please subscribe to our channel to get more videos. And again, check out that link in the description box below. Thank you for watching. Have a great day.